Hello traders, good evening. This is a trading plan for 17th June 2022. Today was an extremely wonderful day for directional players to trade. As I've been sharing throughout the week, the market context was bearish and I myself was carrying overnight positions in Nifty future shorts with 15,800 call long as a hedge. My original entry yesterday was at 15,779, 780. Before we deep dive into the market plan for tomorrow and the market context, let's discuss a few things. How exactly did I deal with my opening? That would be the first thing a lot of people asked me. One rule as a majorly someone who day trades when I'm carrying my positions home, a thumb of rule I follow is that I need to be in a bare minimum profit of at least two times the initial risk that I have taken. Only then, only when I see that my position is moving in my direction on an intraday basis, do I actually carry it home, or else I do not. I understand this is a different style since usually things are seen in black and white like intraday trade or a positional trade, but I usually carry home a positional trade only when I see it moving in my direction, performing as I want on an intraday basis. So what does this offer? This offers a cushion point so that even if the opening is against me, I would be protected to an extent because I'm already in profits. I would only be if market opens against my position to an extent, I would only be losing the notional profits that I still haven't booked on that trade. On top of it, I make it a point always to hedge my positions. How exactly do I hedge my positions? Let us say whenever I take a trade, I have a hard stop in place on an intraday basis, and when carrying it overnight, the stop remains the same, but whether I will get an opportunity to exit at my stop loss the next day in case of an extreme opening against me or not is uncertain. So to mitigate the loss in in such cases, what I do is I carry an option long of the nearest strike above my stop loss. In this case, my original stop loss was 15,800. So since I was Nifty future short, I carried 15,800 call option longs as a hedge because I already had a profit cushion of around 75-80 points. Plus, I carried a hedge. The loss that I saw at the opening was very minimal, and I got a chance to exit at 15,847 levels in the morning. Once I exited in the opening half an hour, I monitor on a 5-minute time frame. You can see that we see a major green candle forming, but then if you look behind, the context was bullish, the opening was bullish. That, as I kept telling you, the zone of 15,800 to 15,666 is where large players have built positions more than the initial sell off, and any move that we get from this zone, the position build happened somewhere at this point. From 14th of June it started basically, and as I said before in yesterday's video, any move will trigger a good momentum. And when we opened outside this band, technically the context was bullish, but once when the opening 5 minutes candle formed, as I monitor order flow, you can see that exactly around the highs of the close of the candle, a lot of long absorption was done. Sellers started absorbing the longs and long started exiting, and then you could also see quite some shorts being put on. Once that happened was when the indication to me was that new longs or long positions should not be opened for the day until we break intraday high. And if at all we slip once again inside this price band, that would be my trigger to short. And the initial target would be 15,666, which is the extreme end of the volume analytics higher time frame price band, and which is exactly what I did and shared in the Telegram channel in live markets as well. But once we started breaking this zone, and as I said, since a breakout or a breakdown above this zone will trigger a move with momentum, this is technically a failed breakout. And once we started breaking down, the momentum picked up and it was even higher. As you can see, even when we started, this is the candle that actually broke the back. You can see that before the break of the candle, quite some decent positions were sellers were aggressive in the market, and every time we started making a low, sellers were totally in control. If you see order flow, and buyers could not keep the prices up, this was a trigger for me to continue the move. As of 15,800, initial target was previous day's close, and below that would be my cue to carry positional long once again, which is exactly what I did, trailing through the whole move. Since this is a move that is supported by volume analytics, volumes range shift, basically the large positions built in this context was more than the seller's shorts who started selling above. Any side of it would have triggered a very good move, which is exactly how I was prepared for a trending move and a target of 15,420 to 440 on a positional basis. But it was beyond my expectations that we reached the target price objective on the same day. So and a completely ordinary day where I was just trading my setup, in fact, turned out to be extraordinary in terms of price movement and the gains. Now, situation is similar even in case of bank nifty. If at all I look for levels from here, next further levels, the next reference level that I see is at on a higher time frame is at 14,818 to 14,840 essentially. This is where old buyers had started coming in somewhere around the same time last year. And bill, as I said, within below between the entire price range, there are again no uh, larger time frame buyers reference areas that we can use on an intraday basis. So how we would deal with intraday basis is on basis of intraday reference zones. If I see that, I will definitely not try to go long at these levels. I would at least need to see the longs that will start coming in the future to be more than the 2-day volumes, the 2-day shorts that triggered the down move. Only then I will start trading longs on an intra basis, or else I will look to sell the rises. And as we had a trending day today, as I mentioned a couple of days earlier on Monday evening as well, after a trending day, when you have a range opening, if at all we open within the range, this today's range tomorrow, or we open lower and go inside today's range, expect volatility to be higher. And your main focus should be to not give the gains that you made today back to the markets, which is what most traders tend to do, expecting the same kind of move every day. That is not something that you should be doing as a trader. You need to wait for the right setups. You need to understand what kind of day you are playing and accordingly take your trades, whether to be aggressive or whether to be conservative. You cannot trade every day simply in the same fashion. If I look at bank nifty, the next reference levels that I see for bank nifty are 32,400 to 32,370 to the downside, and below this I see a reference of 31,800 to 31,840 levels. Again, we have an open ground of almost 160 points here. It's a bit nearer in bank nifty, but as I said, if playing or trading on an intraday basis here, we do not have any larger time frame players positional context, so we need to rely on intraday reference levels at this point. Now, I've been getting a lot of messages, especially about today's trading, where I see that a few people got on held on the wrong side of the market, got caught on the wrong side of the markets, and how exactly to avoid that. Let me tell you something. There is nothing called as escaping or avoiding from failed moves in the market. The only thing that can save you in such times is your adapting capacity and the flexibility of your mind. It isn't a problem, let us say, if you were long in the opening 5 minutes or you were long in the opening 15 minutes. As a breakout trader, your job is to trade breakouts. But the moment index started slipping down again, if you still held on to your longs or continued to buy the dips without any consideration for the market context or the trend, then that is definitely a mistake which you should not be doing, because that is where adapting and being flexible to the process, being flexible to what the market direction is actually about. Because not every day you get an opening and market moves in the same way. Some days you have mean reverting days, some days you have trending days. And more importantly, as I keep saying, you need to focus on the process that you basically follow and ignore all the other things. a lot of unnecessary emphasis is being laid on global markets or macroeconomical aspects, and all of this, except for Nifty and Bank Nifty, the traders who trade Nifty and Bank Nifty think and worry about everything else, which should not be the case. We are day traders and at the most short-term speculators, short-term traders. So it really doesn't matter to us where the bottom is or where the top is, what exactly is the Federal Reserve of United States going to say, or what exactly is the Dow Jones Industrial Average doing, because those things are outside our control, and you cannot. It's basically like you are relating things that are to be related on a larger time frame and a larger time range over the years, but you are trying to do that on much shorter time frames, which is a recipe for a disaster. So the best suggestion that I can offer all of you is to cut down the noise, ignore what other markets are doing, and after markets, try to relax, spend time with your families, take some time out to do your homework for the next day and focus on your process. It doesn't make sense for you to spend all your evening watching XGX Nifty or Dow when US markets open, because you can't trade there. Even if you have a position for the next day, you are carrying overnight positions. There's nothing much you can do about it. If you are worried and you need to look at global indices to because you are carrying a position home, then it simply means that you are risking too much. And understand the fact that when it comes to indices, uh, we cannot always forecast what kind of opening we will be having the next day on a consistent basis. Sometimes, yes, the trend and the market direction gives us clear context, clear clues, but sometimes you may get it right, but consistently every time you cannot do it, because there are simply far too many factors at play. But what you do after the market opens is what you need to focus on, and that is what actually matters. And anything that you cannot control, or any aspect of trading that you cannot use in the long run consistently day in and day out, let's say for the next 5-10 years, is not something that you have to incorporate into your trading arsenal. At the best, it is just a short term fix, but short term fixes don't tend to last. You are not fixing the problem there itself, but you are just looking for a quick solution, and quick solutions are not is not the way to basically go about in the markets. So it's my strong suggestion and advice to all of you to ignore and cut down all the noise, and most importantly, relax after markets and not keep watching the global indices and everything else that is happening. Everything will continue to happen, and it's not simply not in our control. Be prepared for the next day and do your utmost best to follow the process that you have. And if you do not already have a process, please make sure to develop a process for yourself on which you can rely for the years to come. That being said, it indeed was an excellent day to play directional today, being expiry. It was simply a clean downtrending day, and it's happy to see that a lot of people have made a good amount of money. And we need to focus as traders to make sure that it's not going back to the markets, keeping a level head and continuing to play defensively until we get our opportunities. I hope this video was useful, guys. If yes, please make sure to hit the like button and subscribe to the channel. Also join my Telegram channel for live market updates. The link is given in the description below. Thank you all and see you on Monday.